Hello, ladies and gentlemen. Good morning from here, and depending on which time zone you're tuning in from, good afternoon and good evening to you all. As always, I'm very excited to welcome you to the final edition of the Forex Morning Mastery for this week, as we did had a splendid week across the assets we are monitoring this week, especially on the XAUUSD. We were able to capitalize on both buying and selling opportunity during the course of the week, as we saw the markets. We capitalized on the market's immediate reaction to the victory of Donald Trump as the 47th president of the United States. So we are going to be looking into all of this in a moment. And of course, the USOILSPOT has also done pretty well, except for the last 24 to 36 hours where we witnessed a choppy market condition. In fact, I had to abandon that market yesterday due to the uncertainty surrounding the market dynamics. I will be deliberating on that one today. I think we have something that we can look at on the USOILSPOT in preparation for today. Then on the USDJPY, we've also done fairly well on that one. We've had some buying opportunities, and of course the second half of the week has been of selling ideas, which I did updated us on my Telegram platform yesterday. So we are going to be looking into all of this, and in fact, in preparation for today's trading session, I do have a simple trading setup that we can bank on in preparation for the final trading day. Well, today being the last trading day of the week, it usually comes with its own psychological peculiarity. I talk about this every last week, as we do expect that market participants will be rounding up their trading activities ahead of the weekend, and this usually brings in some reversal setups, which we are also going to be taking into account, as price action has a high tendency of moving in the opposite direction of the prior leading price action. So we will be considering all of these factors coupled with the fundamentals and the technical perspective of the market. So I encourage us all to stay tuned in, as you do not want to miss out on the ideas we will be deliberating on today. And for newcomers, for those who are joining us for the first time, you are highly welcome on board. And the Forex Morning Mastery is an educational avenue, not a signal service platform, where we all do the work ourselves by coming together to have a deep understanding into how market participants are behaving across the asset we are monitoring. And of course, we use this information to strategically position ourselves for the next move. So this happens 3 times in a week: Mondays, Wednesdays, and Fridays time, 9:30 a.m. West African time, 8:30 a.m. UTC. So once again, you're highly welcome on board, and I encourage you to engage in the comment section. And if you have any questions whatsoever, feel free to let me know. I'm here and willing to be of help in that regard. And do not forget, during the course of the session, I really appreciate your support by giving that video a thumbs up. Your likes are valuable to me, and of course it also helps the community to grow, as the algorithm tends to push videos who has almost the same like with the number of people that came in on board to a wider audience of traders who may find the content beneficial to them. So thank you guys for doing so. So with that being said, here I can see your comments here. Jonah Aruna, good morning to you. Glad to have you around with us this morning. So with that said, we shall be diving right into the business, and as always, the first thing we normally do every morning is to keep tabs with the fundamental factors that has been, and of course will be, influencing the sentiment in the market today. Well, so far this week, we've had some very interesting situations across the economic features, though the beginning of the week was absent of any impactful event, though we included some economic features along the line. But the major one for this week was the presidential election that happened on Tuesday, November 5, where we saw Donald Trump win by a landslide. And of course, this gave the US dollar some positive traction as a lot of investors dropped all their assets for the US dollar. And we saw the dollar climb significantly during the course of the week. And especially for us who are monitoring the USDJPY and the XAUUSD, we were able to bank on that opportunity. And in the last 48 hours, we've seen a little bit of decline in the US dollar, and this could be as a result of profit-taking activity. After taking that significant move, we do expect that there will be profit-taking activities, which is already reflecting on the chart at the moment. And the question as we head into the final trading day is, will this continue into the weekend, or are there chances that we could see some deep buying activities for the US dollar again as the weekend draw near? Now, yes, on Tuesday, November 5, we also had the ISM Services PMI, a data that gives us an insight into the health and performance of the service sector. And as expected, we saw a 56 actual data showing that that sector is resilient. Of course, this sector has been resilient for the last 3, 4, 5 months or so, so it doesn't come to me as a surprise at all. Then on that same day, that is Tuesday, November 5, we saw the Bank of Japan monetary policy meeting minute, which was published later on that day. And for those of us who are not familiar with what this simply means, well, the publication of the monetary policy of any central bank is considered to be an high impactful event, as it provides market a comprehensive assessment provided by the central bank of the country, detailing the economic outlook and the rationale behind monetary policy decisions. So its impact on the market is expected to be very significant. And of course, we saw how this favored the Japanese yen during the second half of the week. We will be looking at that one too in a moment. Then on Thursday, that was yesterday, we saw the initial jobless claim count from the United States. This is a data that gives us an insight into the number of people filing first-time claims for state unemployment insurances. So this tells us how much unemployment is in the US economy, and if the data comes in higher than expected, it shows that the US labor market isn't doing very well. But if the data comes in lower, that shows that there is signs of expansion in that sector. But from the look of things here, the data actually came in just as market participants and economists had expected, at 221,000, a little bit lower than the previous month, which came in at 218,000. So it shows that there's been some little bit of expansion in that sector, which obviously could favor the US dollar. Then later yesterday evening, we witnessed the Fed interest rate decision, where it's a meeting where the Federal Reserve have a meeting where they decide whether to change or maintain the current interest rate. And of course, the decision was to maintain the current interest rate, which everyone had actually I personally expected that following Donald Trump's election, but majority were leaning towards a 25 basis point cut. But at the moment, it came in at 25 basis point cut. That was what everyone was expecting. So it didn't really cause any significant traction in the market, as the market had already priced in this expectation prior to the event. And one of the interesting moments from yesterday was the FOMC press conference, where we saw the Fed chairman speak. talked about the monetary policy decisions, the economic outlook, and of course, he also answered questions from the media. And in fact, I would love you to go ahead and watch the speech from the FOMC chairman, where he talked about his reaction to the Donald Trump's victory. You know, Donald Trump's policies are not in alignment with the Fed. So it was quite an interesting one. I would love you to go ahead and watch that video. So today, fast forward to today, Friday, November 8th. We only have one high impactful event today, and that is the publication from the University of Michigan, which is the Consumer Sentiment Index. This is a data that measures how optimistic or pessimistic consumers feel about the future of the US economy. So this data will give us some insight into the confidence, suggesting stronger spending and economic growth, which can boost the US dollar. And on the other hand, a lower index can show consumer concerns about the economy, potentially signaling weaker growth and it leading to a weaker currency. So what is the data here? Well, the previous month came in at 70.5, and the market expectation is 71, a little bit higher than the previous month. So it shows that there has been some resilience there. US consumers are feeling confident about the US economy, and with the victory of Donald Trump, it's likely going to come in higher than market had expected. But anyways, we will anticipate and see what the actual data will be like. Will it be just as market had expected, beyond expectation? But I doubt if it will come in below market expectations. So you want to be marking out that timing. That is 3 p.m. UTC, 4 p.m. local time if you are from West Africa. So that is a time you want to be looking out for. And besides this, I will want to also check on the Fed's official speech. That is Bowman, coming in about 4 p.m. UTC. Bowman is she is the governor of the Federal Reserve of University of Mississippi, and she's also an attorney, and she's going to be speaking. Though she's not she's a voting member of the FOMC, of course, and whatever she says will definitely be influencing the market too as well, especially after the first German speech yesterday. So the timing is 4 p.m. UTC. So besides that, that is all we have for today. And of course, what we want to be doing next is to go into the chart, and let's look out for structural patterns that we can actually use to help us navigate this market. As technical traders, we understand that the anticipation of this event usually has its own influence on the market, and of course how market behave prior to the event will bring up some structural pattern that we can bank on to position ourselves for the next move. So what is happening right now in the market? So to start with, we will go in. Okay, Flow Ride, I just saw your comment now. Good morning to you. Glad to have you around with us this morning. So with that said, we will be diving right into the chart, and as always, the first asset we will be taking on this morning is the USOILSPOT. Though we had a good start to the week, but on Wednesday, in fact, the market was so choppy, I had to abandon all my trading ideas as a result of that, and that choppy situation led into a couple of losses for me. So throughout yesterday, I didn't trade the USOILSPOT. If for those of you who are with me on my Telegram platform, you will see I didn't share any public information on the USOILSPOT yesterday due to the uncertainty around the market. But today, I think we have something that we can actually look at. Now, before we go into the technical details of what to look out for today and the market drivers favoring or not favoring the market, let's look at what happened at the beginning of the week. This is basically for educational purposes, and especially for those who are not part of our earlier session. So at the beginning of the week, we had an interesting trading setup after looking at the higher time frame. And one of the major structures we marked out on this chart at the beginning of the week is this beautiful ascending trend line after capturing the series of high and lows. And you know how we use our ascending trend line. As long as price remains above the trend line, we want to be looking out for patterns and structures that supports the idea of buying. Now, besides the ascending trend line, we had our key level at the $69 area, a level which was peculiar with selling pressure and buying pressure in the past. For those of you who saw our top-down analysis on Monday, and for the fact that price remained above that, these two structures, we were looking out for buying ideas. And to look at how the week started, we saw the week started on a bullish note. We had the support line for the week at the $69.45 level, and springing out of this structure is this massive engulfing bullish candle, giving us signs that buyers may have gotten a platform to build on some momentum for the week. And with that said, we had our resistance line here at the $70.80 level. This was where sellers started to put pressures on buyers, but at the end of the day, it failed as we saw price broke out of that particular structure. And one of the things I said here on Monday was that if you in any way missed out on this bullish move, then we want to be having a buy limit order back at that structure, as we may see price come back, retest that structure to continue that uptrend move. And this was exactly what happened, and we were able to see price move over 185 pips. And then we also had a second position triggered at the $71.40, with price moving over 120 pips move. And as you know how we do it, whenever price moves significantly, we move stop losses, and depending on where you had moved your stop losses, we close that position at a very good number. So congrats to everyone who capitalized on that opportunity. Now, during our Wednesday trading session, we begin to notice that price was trading and oscillating around that $70.80 level. Remember, that was the resistance line at the beginning of the week, and it was a platform that triggered that bullish opportunity we took. And due to this oscillation around that particular area, we decided to scale down into a much more lower time frame to look out for trading setup that we will use for Wednesday's trading session. And when we did that, we were able to identify a simple structural pattern here. Remember, for those of you who are part of that session, this is what we actually saw. We saw the situation where price was oscillating around that resistance line, trading between the $71.25 level and the $70.20 area, giving us a consolidation phase, emphasizing the prevailing uncertainty at that point in time. And even within that range, we were able to spot the structure here, that is the $70.95 and the $70.65 area, as you will see. And one of the things we said here is that we are leaning towards a bullish traction. That is, the sentiment is supporting a bullish idea that we will be buying the breakout of that structure, which actually happened but didn't last long before sellers came in, taking out of that position. So I had a stop loss hit here, though I had the first one. We had a break even buy limit again triggered, but I got stopped out on that one. And the same thing also happened here. I had a sell position triggered at the $70.20 level. That one also got stopped out before this bullish traction happened. So yesterday, I just decided to stay out of the market and wait for new structures to mature. And for those of us who are part of this journey, well done and kudos. At least we did fairly well on this particular asset. Now, in preparation for today's trading session, what are the chances? What are the chances both buyers and sellers have in this particular market? And for us to understand this, we need to take into account the major market drivers that will be influencing the sentiment in the market today, or has been influencing the sentiment in the market. And from what I was able to gather from the economist and financial news, the path of least resistance for US oil spot is looking very bullish. One of which is the Fed interest rate cut we saw yesterday, which was a 25 basis point cut. And this is, when there is an interest rate cut, what happens to the dollar what happens to the dollar? Well, the dollar definitely has a tendency of dropping and could support economic activities in the US, as there will be business, people will be going to work, borrowing costs will reduce, and this would allow business owners to borrow money from the bank, which will be much more cheaper, so activity will move, and due to this activity there is a high chance that fuel demand will increase. So one of this is this idea of the interest rate cut for me. So I see that as a positive signal for the US oil spot. Then also, analysts expect that Trump's administration may impose stricter sanctions on major oil producing nations like Iran and Venezuela, which could reduce global oil supply. And from our simple economics, when there is low supply, what happens? Demand definitely will increase, and price tends to increase as well. So for me, this is a positive signal, but we don't know how the market is going to edge this, but we will take it into account while we are reviewing this market too as well. Then the ongoing disruption in the Gulf of Mexico due to the Hurricane Rafael have led to shutdown of over 22% of crude oil production and 9% of natural gas output, which may heighten supply concerns and support oil prices as well. Now, the last one, which is also a good news for buyers of crude oil, is the Chinese stimulus hope we've been talking about since the beginning of the week. Remember, there is this seminar going on for about 3-4 days thereabout, where there is an expectation that there will be stimulus in China. Now, despite a recent drop in Chinese crude imports, hope still remains high for this stimulus measure from China's government, which could boost oil demand. I remember China is the largest importer of crude oil in the world, and if the economy is doing very well, it is expected that they will demand for more oil from the global market, which will tend to boost the demand, and of course price will rise on that one. So for me, the path of least resistance for US oil spot at this moment is looking very, very bullish. However, in as much as it's looking bullish, we need to also consider the decline in China's oil imports too as well. China's crude oil import dropped by 9% in October, marking a 6-month streak of year-on-year decline, which may signal weaker demand from a major oil consumer like China. Now, that is the only red flag for me at this point in time. Now, how is the market digesting this information? How are they taking this information? Of course, this will be seen reflect on the chart as price action. Now, looking at the chart right here, I wasn't able to get something significant on the 1-hour time frame, so instead I scaled down into the 50 minutes time frame, and in fact I was able to identify a beautiful trading setup for today's trading session. I already have a sell position triggered right here at the $71.50 level, and I will explain to you why that is. Now, if you look at what has been going on in this market in the last 12 to 18 hours, you will see that price action had dropped significantly, and along the line it has formed or evolved into a structural pattern that is looking like a descending channel. Now, if we connect the series of lower highs, you can see we have the resistance line of the descending channel, and when we connect the series of lower lows, we have the support line of that descending channel. And look at how beautifully that support line of that descending channel lines up with the $71 $71.50 level, an area which has been known to be a selling niche prior to that bullish momentum we saw yesterday. Now look at this. Buyers were finding it difficult to break through here, and the same thing also happened here. You saw it before that breakout of structure happened around this area yesterday evening. Now price came back into the structure. Instead of buy pressure coming in, what happened? We saw an engulfing bearish candle slice through that structure, and in fact it came back to retest it, giving me that opportunity to continue the decline. Now one thing about that level is that it also shares a confluence with that support line of that descending channel. So a breakdown of the support line further confirms that sellers are strong at this particular point in time. And for those of you, based on your experience with me, you are able to capitalize on that opportunity. Well done and kudos to you, as you will currently be running with about 29 pips in profit at this point. So what I will suggest you do right now is move all stop losses. Let's secure this current sell position. At break even is a worst case scenario here. And the reason why that is simply because of the fundamental factors we talked about earlier. Remember, we talked about the everything looking positive. We talked about the Fed interest rate cut. We talked about the prospective sanctions on oil producing nations from Donald Trump if by the time he resumed office. We talked about the Gulf of Mexico supply disruption, and of course the potential stimulus from Chinese economy, all of which supports a bullish idea. Yes, so I will not ignore the potential that buyers can actually come in at any point in time today. Now, in as much as we have a sell at this point, look at what is going on right now. Price is gradually coming back into that resistant line at the beginning of the week. Remember, this was the level that we used to join that uptrend move we capitalized on at the beginning of the week. Will price come back to find buy pressure around that area? Maybe, maybe not. And if that happens, we may be seeing another reversal pattern here to continue that uptrend move. And if price goes ahead to break down the structure, then I will just be willing to add as many more sell positions as possible to the downside. But if price does not get into the $70.80 level and we begin to notice buy pressure here, that is inability of price to find a lower low, then this could trigger an uptrend move from here. And I'm looking at the $71.50 area. If price can climb back above the structure, then I will be willing to join an uptrend move after citing breakout retest of structure and a final breakout of that resistant line of that descending channel will be all I need to feel comfortable in a buy positions here. So you can see how crucial the $71.50 level is going to be for us today. So it's important you mark this level out on your chart, as a break above of this area will confirm an uptrend scenario. While I said a further breakout of the resistant line of the descending channel will make it more suitable to add more buy positions to our existing trade. So at the moment, we hold on to a bearish bias below the $71.50 level. I told us to move our stop losses to secure position. Let's see if the market will come back, retest the trend line to continue the downtrend move. Then for those of us who missed out on that opportunity, we can join in at that point and then add more position if it goes ahead to break down the $70.80 area. But if I see a reversal pattern here, trust me, I would like to join a bullish move from that particular point. So let me just label that here. So if I see a reversal set up from here, hold on a second. So if I see a reversal pattern, it could be a double bottom structure, inverse head and shoulder pattern, falling wedge, whichever case it may be. We will be joining a bullish move from that particular area. So this is my simple view, but if there is anything new that comes up along the line as we continue to monitor price action, I will update us on both my TradingView and Telegram platforms. So this is my simple view on the USOILSPOT for today. I hope I made myself very clear. If you have any questions whatsoever, feel free to let me know in the comment section. So I will take the next 5-10 seconds maybe. Let's see if there are any questions before we move on to the next asset on our watch list. So stay tuned in, guys, and do not forget to give that video a thumbs up. Thank you very much as you do so. Cheers. Okay, so I see you, Sahid Nasiru. Good morning. I'm fine, thank you. I'm doing very well. Thank you very much, Saeed, and trust you are doing the same too as well. So, in the absence of no questions, I want to assume that we are all on the same page. I hope you've marked out those levels and structures accordingly. This is what we are going to be using to navigate the market today. So let's see how this will play out in the next couple of hours as market participants anticipate the Consumer Sentiment Index reports coming up today. So moving on to the next asset on our watch list. So the next asset we are looking at the moment is the USDJPY, that is the US dollar against the Japanese yen. And of course, what an interesting situation we have here. Remember, we didn't start this week very well, but we had a loss at the beginning of the week, but we were able to recoup the loss and of course make some profit on top of it while we capture both bullish and bearish momentum in the last 2 to 3 days. Now let's look at what happened at the beginning of the week. We had this key level at the 152.00 area, and you know how we use our key level. When price remains above the key level, we obviously want to be looking out for buying ideas. And due to this and the emergence of buy pressure around the support line at the 151.600 at the beginning of the week, welcomed buying ideas for us above the 152.00 area, and with our stop loss way below the support line here, we got taken out of that buy position as we saw here, and this was following the narrative surrounding the potential intervention from Bank of Japan, which gave the Japanese yen a little bit of traction at the beginning of Tuesday's session. And then the news of Donald Trump's victory began to seep into the market, and this resulted in this massive bullish move with a buy stop order above the 152. We saw price climb up, and of course we had the opportunity of maximizing that uptrend move by adding more position had a break of the 152.865, and of course we saw the first move about 260 pips, and the second one moved about 190 pips. So it was approximately a 400 pips move before the bearish momentum came in. And of course, depending on where you had moved your stop losses to, we were able to take in some modest size of profit while we also recouped the loss we incurred at the beginning of the week. Now, during our live session on Wednesday, we were able to identify an uptrend continuation pattern, which did not last long. Remember, let me show you what we saw here on the 15 minutes time frame. Was it here? Okay, I think it was here. This one. So we had this uptrend continuation pattern. After taking into account this impulsive move, we had this ascending triangle where we were looking to price breaking out of that resistant line to give us an opportunity to buy. Of course, it did happen, but it did not last long. The momentum wasn't strong enough as we saw price move about 49 pips before I was personally taken out at break even on that one. And then during my commentary yesterday morning, I did give us a new update as we saw price continue to find lower lows and lower highs, and after connecting the series of lower highs, we had this beautiful descending trend line to guide our trading decisions for yesterday's session. And we all know why the descending trend line came in, the bearish momentum came in. We've been hearing Japanese government officials, including the Chief Cabinet Secretary, reiterating that their commitment to closely monitor the FX market with urgency, and that lent some temporary support to the Japanese yen. And of course, the Japan's Vice Finance Minister, of course, also expressed readiness to take action to manage excessive currency moves. So showing a firm stance that slightly supported the yen buying sentiment, and this has continued for the last 24-36 hours as price continued to drop to the downside. And during my commentary yesterday, I did give us this setup here where I said a reversal setup here, that is continued selling pressure, will be a good opportunity to join a bearish move. And if you missed out on that one, we also had the breakdown of the 153.750. This was actually my update yesterday morning, and if you had capitalized on that opportunity, well done to you, as we had the first one moved over 200 pips thereabouts. Yes, over 200 pips, while the second one also moved over 140 pips. So well done, kudos to you on that one. And this morning I also had another sell position after citing another selling pressure. So this was what I was looking at this morning. Price still remains below that descending trend line, remember, and then we had price consolidate throughout the Asian session, giving us a range bound structure to work with ahead of the London and New York session. And you know how we treat our range bound structure. Whenever we identify them, it tells us that there is an uncertainty, and when we see this kind of uncertainty, we wait for price to either break out of the resistant line to give us an opportunity to buy. And look at how the resistant line shares a confluence with that descending trend line. If price ever breaks out of that resistant line, it will also have taken out that descending trend line, welcoming more selling ideas. But that never happened, but instead price did drop below the support line at the 152.700, triggering this current sell position I'm having here. So for those of us who saw this, well done to you. But if you didn't, well, it's okay. Let's see if the market will give us another chance to continue that downtrend move. And in fact, we are looking forward to price coming back to retest the 152.700 or that descending trend line to incite a downtrend scenario. So that is one option we are looking at here. Let me extend this trend line a little further to the downside. So because it's going to be playing a significant role today. So we might see price come back to retest the structure, or that descending trend line to give us new opportunities to join a sell. So let's watch out for that possibility today. Now, it is not all the time that price comes back to the retest structure. Sometimes we can just see price continue the downtrend if the bearish move is very, very strong, and to do that we might see a little bit of consolidation phase here before it continues that downside again. So let's watch out for that possibility as well. So if that is going to be the case, how do we capitalize on this one? At the moment, we don't have a structure here on the 15 minutes time frame, but if we scale down further, let's say to the 5 minutes, I think we should be able to have something to work with. So let's see how this is going to play out. Will it continue to consolidate within a range? But I can tell you for free that we have a support line here at the 152.270, where a breakdown retest could welcome more selling opportunities. So let's label that 152.270 level. So price breaking down, retesting that structure will definitely welcome selling ideas. But if a double bottom structure is formed, a reversal setup, then we might be seeing price come back to retest that descending trend line in an attempt to continue that downtrend move. Now, if you are a scalper or a short-term trader, or you feel comfortable taking counter trend opportunities, the emergence of a reversal setup here, like a double bottom structure, will be confirming that short-term buying opportunity back into that trend line, which will be dovetailing to about 50 pips. So to buy that, you want to see price take out the neckline of that reversal pattern, which is at the 152.425 right here on the 5 minutes time frame. So this is for counter trend traders, day traders or scalpers who are willing to take on short-term trading opportunities. So if you could buy above the 145.525, give enough breathing space for price action to move around. Of course, you want to have your stop loss way below the support line. That's about 17-20 pips of stop loss, and then TP target around that descending trend line at the 152.900. That's about 48 pips thereabout. So that is one idea there we can bank on today for counter trend traders. But for me, if that happens, I will just wait for price to come back into the trend line, where I will be waiting for any form of reversal setup to continue that downtrend move. So I'm not going to be joining that counter trend move. But if you are a scalper, day trader, you might be willing to take on that opportunity. So that is that on the USDJPY 5 minutes time frame. So going back into the 15 minutes time frame here. So now if it so happens, because there are some fundamental factors behind the scenes that has a potential of influencing the US dollar as well. We have the persistent doubt about the Bank of Japan's ability to continue raising rates, which may cap the potential gains for the yen at the moment. So for those who still have a sell position right now, please, it's important you move your stop losses, secure the current position. Anything could happen. We also have the optimism about the US growth and inflation prospect under Donald Trump's administration, which can support higher US Treasury bond yield, pressuring the lower yielding yen, of course. And then we also have the Fed's continue easing cycle, which is probably going to now, despite the Fed's rate cut, now a dovish Fed outlook was overshadowed by the US dollar strength yesterday or during the week, as market participants continue to buy into the US dollar, and this could also limit the yen's potential recovery. So if that is going to be in play or guide the potential in the market today, I don't want us to ignore any bullish idea. But for me, buying here as a long-term trader doesn't look promising. So instead, I will wait for price to break out of that descending trend line. So if price can break out of that descending trend line, look at it. If we go to as far back as Thursday's trading session, if price can break out of that descending trend line, that will be the first time it has broken out of that structure, and it could trigger the second leg of the bullish momentum that started this week. So for me, as a long-term trader, a swing trader, I will wait for that breakout of that descending trend line before jumping into a buy position. And if price continues to climb, a breakout of the 152.9 will welcome more buying opportunities. So that is how I will be looking out for buying opportunities around the USDJPY for today. So let's see how the market is going to play out. This is our setup for today's trading session. I'm very sure the data coming in from the consumer sentiment index is going to be playing a significant role today. So let's see how that will play out. Mark out these levels and structures, as you will be needing them as a reference point to guide your independent trading decisions today. If you have questions or you need further clarifications, feel free to let me know in the comment section. So I will take the next 5-10 seconds off. Let's see if there are any questions before we move into the final asset on our watch list for today. Stay tuned. All right, so in the absence of no questions, I want to take that as a confirmation that we are all on the same page. So with that said, let's move right into my final asset for this week. Okay, I just saw a comment now from Saeed Nasir. How are you, Saeed? So Saeed is saying here, hold on a second, I just saw the message pop up on my screen now, but I can't find it. Let me refresh the page. I think I saw the comment just now. I wonder where that go. Okay, so I see it. Saeed says that my buy is triggered at $2,687.50 level and second on 2,691. So what should be the stop loss for these? And do you think it will go above 2,007? Because the current structure is bearish in higher time frame. Which asset are you talking about here? We just finished USDJPY, and those price levels don't correlate with the structures we just talked about here. Which one is that? Oh, and that cannot be USOILSPOT. So 2,687. Oh, maybe gold, right? If it's gold, we are yet to go into gold. So hold on, let us go into gold first, and then we'll talk about that. Please just remind me in the comment section. Okay, so with that said, let's run into the final asset on our watch list. Thank you. So the final asset on my watch list for today is my favorite amongst them, and that is the XAUUSD, popularly known as the gold spot. And on the gold spot, the week did not start very well for me actually, though we had some modest profit buying above the 2732 at some point. I think before that I bought above the 2740. That went into a loss, as you will see here. Bought here, I joined that move, joined this one too. This one went into a loss. The second one went into break even. So it was more of a choppy market condition. And of course, we talked about this expectation on Monday as market participants were looking forward to the outcome of the US presidential election, and this caused a lot of choppy market conditions around these particular structures we had here. Now, following the news from the election, we saw a massive support for the US dollar. And during our live session on Wednesday, remember vividly, we talked about this, and in fact, I'm very excited about that development. It was just exactly as we talked. Now, on that Wednesday, we had a simple trading setup to help us navigate the structure. Remember, we had our descending trend line. We had this descending trend line. So let me capture it here. So we had the resistant line of the descending channel, of course, and then we had the support line of that descending channel. And right within that descending channel was a robust demand zone. And this demand zone here has been supporting price action since the beginning of the month. Now, following the massive bearish momentum we saw here on Thursday of the last trading day of the month of October, we saw that sellers were finding it difficult to break through this zone between the 2724 and the 2735. As you will see, every attempt by sellers to break through was always met with strong resistance from the buyers. And for us at the beginning of the week, I was thinking the price will continue the momentum to the upside here, which resulted in that loss I had at the beginning of the week. But I said something interesting here on Wednesday, that if price okay, so prior to Wednesday's session, we already had this strong engulfing bearish candle slicing through that demand zone, and this was the immediate reaction to Donald Trump's election. So what I said here on Wednesday was that I will be waiting for price to come back, retest the resistant line of that descending channel for us to continue that downtrend move, which was exactly what happened. I was just excited about this, which is unusual of me when I'm trading gold, and price dropped significantly into the 2695 area. And for those of you who saw my commentary on Telegram and my TradingView platform, I updated us immediately that price action is at an important confluence at the 2695, a level that is lining up with the support line of that descending channel. So I said here that we will only buy if price evolves into a reversal pattern. This was my indication here, and we'll continue the sell if price breaks down both the 2695 and the support line of that descending channel. So price dropped significantly. I had my TP target at 2650. The first position got taken out with about approximately 800 pips, while the second one closed with about 400 pips. For those of you who are part of this journey, well done. Kudos to you. Now, during yesterday's session, I did updated us with a new trading setup. If you remember, this was what we were looking at yesterday. During my commentary yesterday, I said we have a consolidation phase going on here as sellers had continued to negate the buyers have continued to negate any further decline in price, as majority of market participants were considering the gold cheap enough to buy from this zone around the 2,655 area. And if you saw my update yesterday morning, I said I will be buying a reversal pattern around this area and then adding more positions at the breakout of the 2,665. And if you took it, well, we saw price move very well from the second level for about 450 pips. And if you took it from this point here, I think you should be having over 500 pips. So personally, I joined 2,655. I only had one position. Price moved very well in my favor and moved stop losses accordingly before we got taken out with a significant amount of profit on that one. And for those of you who are part of that profitable journey, well done, and kudos to you. So as it is right now, what are our chances for today's trading session? Are we going to continue buying the XAUUSD, or are there any chances that price could drop to the downside? Of course, we have a situation here where we had an engulfing bearish candle following, an impulse bearish leg following the news from the victory from Donald Trump. And this may be considered a counter trend opportunity or a retracement move where a downtrend scenario could continue. Today, it's a possibility, and we cannot ignore that during our analysis. But before we go into those technical details, as I have a new structure to guide our decisions today, for those of you who are with me on my Telegram and TradingView platform, you already have that structure with you. But for those who are just joining here, don't worry, we will talk about that. But before we go into that, let's talk about the market driver in this market, which reflects a complex interplay of factors with rate cut expectations and the movement in the US dollar, which has been influenced by the Donald Trump's victory in the US presidential election. Now, supporting the gold at the moment, I think that if we look at the character of price action in the US dollar market, you will see that the US dollar is currently going through a pullback after traders are closing out profitable positions from Trump's victory. Those who bought the US dollar after Trump won may start taking some profit off the chart. And if they start taking profit off the chart, what happens? The price of the US dollar would drop a little bit. And of course, we are seeing that happen reflect in the gold market. So this is the reflection of profit taking activity from the US dollar as we saw gold rise back up a little bit. Now, will this momentum continue? Well, if we look at the first decision yesterday to lower its interest rate by 25 basis point cut, that is another positive factor for the gold commodity. Now, you know the dynamic behind interest rate cuts. If there is interest rate cut, what happens? The value of the dollar will definitely drop, and if it drops, the gold commodity becomes cheaper to buy, because for you to buy the gold, you need to convert your local currency to the US dollar, which is now cheaper. Then you can buy gold. So for me, that's another positive factor for gold. Then the first Chairman's comments and a lack of signal for a near-term rate pause suggest further cuts may be likely. So with traders pricing in a 25% chance of another cut in December, this outlook may put pressure on the US Treasury bond yield and indirectly supporting the gold commodity. So if you can see what I'm talking about here, I still believe that gold still has a chance of continuing that uptrend move. However, in as much as these chances are still there, the post-election of Donald Trump could still favor the US dollar, as this move we see here could still turn out to be a retracement move of that impulse leg we had here. Now, to drive price further to the downside, we need to see some dynamics that will favor the US dollar. And looking at the market drivers here, the anticipation of Trump's pro-growth policy may continue to boost US dollar demand, which might not be an instant thing right now. Of course, it might not be an instant thing. It's going to be a gradual thing as we listen to what Donald Trump will say. I think he had a speech this morning. I'm yet to read that. I just bookmarked it. And then a general positive market sentiment could weigh on the safe haven assets as investors may favor riskier assets and amidst economic optimism. So with that being said, here we have a counterbalance to the positive driver for gold at the moment, but we will only bank on the behavioral patterns of market participants, who will give us a clue into how market participants are digesting this information. And to understand that, I wanted to look at what has been going on since the Asian session, and to do that we have something on the 15 minutes time frame. Now this is the 15 minutes time frame here, so I hope you have the same on your chart. So on the 15 minutes time frame, I can see an ascending trend line after connecting the series of higher lows since the Asian session. And look at what we have here. So you know how we treat our ascending trend lines. Of course, as long as price remains above the ascending trend line, we definitely want to continue to look out for patterns and structures that support the idea of buying that asset. Now, with the situation we have here, you would agree with me that we are at a crucial juncture where price action in the last, let me see, 1, 2, 3, 4, 5, 6, 7, 8, in the last 3 hours has been oscillating along that ascending trend line. So here we have an indecision going on at this point, as market are not sure if the dollar will continue to rise, or it's going to be another platform to continue buying the gold commodity at this point. So we are at a crucial juncture where I did updated us this morning that I'm looking to buy above the 2,687.50, which I already did. And of course, please, you ensure you have a wider stop loss for this position because of the potential volatility that usually comes with last trading day activity. So you want to be having something as wide as below the support line at the $2,680.50 level, and that is dovetailing to about 75 pips of stop loss on this one. So if you can afford that, that will be the most appropriate area to have your stop loss on that one. Now at this point, I have a bullish bias in place, bullish opportunity going on right now, but in as much as we're talking about this, I said earlier that we could see price drop to the downside. This could be the second leg of that bearish momentum that started following the Donald Trump situation. So for me, if I want to consider selling, what chances or what area will I be looking out to sell? Well, obviously, I will need price to take out this ascending trend line first of all before I want to start considering selling. But I would not want to join a sell right away, as a breakdown of the ascending trend line could turn out to be a false breakdown where price could come back and continue the uptrend move. So I will really need some significant confirmation to join a bearish move. Now, secondly, there are signs that buyers are present in this market. Look at these candles. Even below the ascended trend line, you can see we have a couple of hammer candle, which theoretically tells us that buyers are still present in the market. So for me, this is a support line for today. So if I'm going to be selling, I would rather want to see price take out all the buy positions here, and that will result in a breakdown retest of the $2,680.50 level. Then I will feel comfortable joining a bearish move. If this does not happen, I'm not looking at selling the XAUUSD at all today. So at the moment, I maintain a bullish bias. I'm looking forward to this momentum to continue. TP target, well, if we are not going to be too over ambitious, you can have between the 2,704 and the 2,710. That's about how many pips? That's a minimum of 160 to a maximum of how many pips that is from. That's a maximum of about 230 pips. And if price goes ahead to break out retest of the 2,710, we're definitely going to be adding more buy positions to our existing trade. So this is my view here on the XAUUSD. A very simple setup. As you will see, our center of focus for today is right within the 2,687.50 and the 2,680 $1.50 area. So let's see how the market will play out. If anything new comes up, I will definitely give us updates on both my Trading View and Telegram platform. So let's see if we have any questions whatsoever, and please kindly support the channel. Click on that like button. Let's make the number of like tally with the number of people on board, and thank you very much as you do so. So I can see oh wow, we have a lot of likes here. Thank you very much, guys, for the support. I really appreciate from the bottom of my heart. So let's see if there are any questions before we start rounding off on today's Forex Morning Mastery. See you soon, guys. All right. So I see you. Soldier Pete. Oh, you're back again. Good morning to you. It's been a long time since I saw you here, right? I'm very sure it's been a long time. How are you doing today? Glad to have you around with us this morning. Trust you are doing very well. All right. So Saeed says it is for gold. Okay. Did I cover those areas you are asking question on? Please let me know in the comment section. Did I cover it? Yeah. So you said you have two buy positions, one at 2,687. Of course, I have that one. I also bought there. And you said you have a second one at 2,691. So why did you have a second one at 2,691? On what basis was that second one placed? I'm not sure why that is. Remember, we're at a very crucial juncture. Price is still trading above that ascending trend line, and we don't want to be exposing ourselves too much in such a crucial area. We need to see price action get out of this place significantly, and then at some point maybe come back, retest the structure to think of adding another buy positions here. So buying around this, having two buy positions here for me is quite risky. It's like you're exposing yourself too much around a crucial juncture like this. So for me, I only have one running. I have my stop losses way below the 2,650. That's about 70-75 pips of stop loss. I'm hoping that the momentum will go. If it doesn't, well, I only risk a minimum percentage of my portfolio on that particular trade, and I'm considering selling only when the 2,680.50 gets broken and retested. So that is my view here. I wonder why you have two buy positions. If you don't mind, let us know in the comment section. Maybe we could discuss about that. All right, so in the absence of no questions, I want to assume that we are all on the same page at the moment. Thank you very much for the support, guys. I really do appreciate this. Thank you very, very much. So it's on this note we have come to the end of today's Forex Morning Mastery. It has been a wonderful moment with you guys today. I really do appreciate your support, and of course the journey this week has been massive. We were able to capitalize on those opportunities following the US presidential election, which favored us immensely. So we looked at the USOILSPOT, the USDJPY, and of course the XAUUSD, where we were able to identify simple trading setups that will help us navigate these current structures today. And I do hope you marked out those levels accordingly. Very, very important. If you do, well done, kudos to you. So all we need, do right now is exercise patience and allow the structures to mature. And always remember that the financial market is an uncertain environment. No one knows where price action is going at any point in time. If anyone tells you that, is lying to you. So because of this uncertainty, we want to ensure we have a well-defined risk management strategy in place. So please, let's make sure we have that in place on every trade we take in the market. And for those who joined us for the first time, you're highly welcome on board. Glad to have you around with us this morning. I hope you were able to get a couple of things during the course of the session. If you did, you want to be part of our subsequent editions. The more time you spend with us, the better you get to comprehend my analytical approach. So I look forward to seeing you same time on Monday, 9:30 a.m. West African time, 8:30 a.m. UTC, as we come here again to start the week on a fresh new note. And if you're yet to subscribe to the channel, I encourage you to do so right now, as I will be dropping some interesting ideas during the weekend, my thought process in preparation for next week, especially on gold. And if time permits me, I will drop on the USDJPY or the GBP/USD, depending on which one favors my consciousness. All right, so with that being said, I want to wish us all the best of luck today. Have a wonderful weekend. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.